on your side with breaking news and the Tri-State's most accurate forecast. This is Good Morning Tri-State.
There are some tax law changes that are designed to help small business owners and get more people back to work. Our financial expert Bill Hesh is here to break it down all for us. It's kind of complicated because there's a lot of information. First, good morning to you.
Thank you. Good morning, Deb. It's great to be here again.
So complicated, though. What is the new law?
Well, the new law is back in March. Obama had two tax pieces of legislation to try to, in particular, get new people hired. So there's two credits that small business owners have. The first one is a payroll tax forgiveness, that if you hire a qualified person, and the definition of that is someone who has not worked more than 40 hours in the past 60 days.
Okay.
So between now and the end of the year, the company does not have to pay 6.2% Social Security tax.
So they're trying to encourage hiring people who have been out of work for some time now.
That's correct.
Okay.
And if you're out there and you're out of work, you have to certify when you get hired that you meet those criteria. So you need to make sure, if you do qualify, to let your company know, I qualify for the new hire tax credit. In addition, if you retain that person, the company does for a year, that the wages paid the last 26 weeks, you have to be at least 80% of the wages paid the first 26 weeks. So there's computations involved, but that's another credit. That's $1,000 that the company would get. That's the maximum credit. So that's another incentive for a company not only to hire someone, but to retain them for the next year, the next 52 weeks.
Okay. There's something also that has to do with health care, right?
Health care. So part of Obamacare for the health insurance was that for small business owners, there's a tax incentive that you get a credit if you purchase health insurance for your employees. You have to pay 50% or more of the premiums, and you get the credit this year. So this is a current credit. The credit is based upon a percentage of the premiums that the company pays. And so the credit is basically if you're really small, which they define as 10 employees or less, and the average wages for your employees have to be $25,000. So these are really small companies. The credit is 35% of the health insurance premiums paid. It phases out pretty quickly, and if you have 15 employees, for example, and $35,000 average wages, the credit's only 9%.
Okay. And real quickly, though, a lot of companies are having trouble even staying afloat now financially. You think that this is going to make an impact? You think that they're going, with these incentives, they're going to have the money that they need to be able to hire other people?
At this stage of the game, I don't really believe that it's enough of an incentive that they're going to go out and hire more people to get the credit. I think it's really important for employees out there that if they do qualify for their credit, to let the company know, because it may make a difference as whether they hire them or someone else.
Okay, very good point. Thanks so much for joining us this morning. We will have all this information on WCPO.com in just a little bit, so you can check it out to learn a little bit more.